All right, good morning, trade pros. Welcome to our morning market update for Tuesday, June 26th of 2018. This is George Pappas of Trade Pro Academy. Feeling significantly better, and the better me means it's going to be better for you and for all of us. I'm happy to be back. I'm climbing out of the cold land here. I had a pretty bad virus over the last couple of days. One of our members from New York said it's kind of going around the Eastern board, and he had it for 10 days. I was lucky to squeeze out 6. So, anywho, let's talk about today. We're gonna cover a lot of things. Chinese stock market collapses. It is now officially into bear territory. Means 20% more drop. 20% or more drop has already occurred. We're going to talk about that. We're going to talk about China's tariffs on an international scale and what they're doing to kind of counter that, which is an interesting move. And last but not least, we're going to talk about American Express and why it's a big win. All right. So in Asia, Japan is flat. In Hong Kong, markets are down 0.3%. China's down 0.5%, and India's up 1/10. So you can see weakness across Asian markets today as well. In Europe at midday, they have stabilized equities in Europe. London is up 0.4%. Paris is up 0.3%, and Frankfurt futures are flat for the day in Germany. In the United States, markets are looking a little more bearish. Dow is down 0.2, S&P is down 0.2, and Nasdaq's down 0.1%. So slightly moderately bearish, not so much. But after yesterday's day, after a big sell-off, we are bound to see a little bit of a recovery, a little bit of a rally into the open. There is typically a rebound or a rally into the U.S. Open sessions, and then those rallies have been faded very extremely over the last couple of days. In fact, if you had just followed what we chatted about yesterday, sell rallies, you had a great opportunity to make one heck of a day for yourself. Today, we see a little bit more of that opportunity early on, selling rallies, but I would say that the opportunity or the probability of that working as well as it did yesterday is much less today. We could have a little bit of a pull up, and I think it's the bulls' time to try to see what we could do on the upside. So I'm going to start off bearish by selling rallies, but I'm going to reverse to the upside and get bullish if that momentum proves itself. All right, crude oil is down 0.2%, just shy of 68, and currently trading 68 already, 68.29 at the moment. Pit session open on crude was 68.06, so we're seeing a little bit of bullish momentum on crude above 68. Key resistance is at the 70 evens on crude, the 69.88s. All right, gold price is down another 1 percentage point. I've been telling you guys not to get long gold yet. Yes, gold could go up in the future, but in the short term, gold's bearish. Seasonality pushed this thing down into August. Late August, early September is when it starts to rebound a little bit. For the Indian holiday Diwali, and the gold buying demand tends to spur around that time. All right. Bitcoin just fighting for that 6,000, man. But 6,221 down 0.4%. I see Bitcoin slipping below 6K, going down to 4,400. Be on the lookout for that. I'm not saying it's going to happen. I'm saying the risk is there. So be prepared in case that it does happen. All right. In terms of today's economic calendar, at 9 a.m., we had the Case-Shiller Home Price Index. That missed right at the top of the hour. We heard the squawk before we did the morning market update. 10 a.m. at the top of the hour, we have consumer confidence, Richmond Fed Manufacturing Survey, and State Street Investor Confidence Index. So we got a heavy economic cycle at the top of the hour at 10 a.m. 3 separate releases, and if they all miss or beat at the same time, there's going to be momentum. Otherwise, you could see some chop and some sideways consolidation type plays on those news. So be on the lookout for that 30 minutes after the U.S. session open. All right, let's talk about these U.S. or rather Chinese stocks. Chinese markets crashed into bear market situation. Since January, the stock market's now down officially over 20%, and it's wiped out $1.8 trillion in market value. Now, not all this is the U.S. is doing. It's not all the tariffs and all the trade war that's been happening. It's more so the fact that China had some weak economic data to begin with going into the end of last year. There were some weak economic indicators that were a little suspect. The Chinese bank was supplying a lot of liquidity. They were messing around with their repo rates, trying to ensure that the economy was good and stable and to provide some support. And not really support in terms of monetary, but confidence to investors to let them know we got your back. It hasn't worked that well at all because markets are down. And if you look at what happened in 2015 of August, the same type of crash happened, and it led from China. All right, China devalued their currency at the very end as a save face measure after having a few weak months. The currency absolutely dropped. Asian markets got hammered, and as a result, the U.S. stock market bled out very quickly in 3 short days. I remember that like it's yesterday because I was trading an options portfolio back then. All right, so just be on the lookout. This starting to occur is an interesting thing to track with. Despite the People's Bank of China (PBOC) adding liquidity and cutting rates, there's still some bearish momentum into this market. So track the Chinese market. It's a global marketplace. So usually when a big economy like China starts to drop, it could be a leading indicator for some other equities globally to start dipping as well. And we're starting to see that. We're starting to see S&P break down. NASDAQ yesterday took one hell of a tumble. We saw Russell drop off yesterday. Dow Jones hasn't been able to recover at all. We had 8 consecutive losing days leading up to the Friday of last week. So you're seeing bearishness spread around on a global scale. All right. Meanwhile, China's removing import tariffs on some animal feed ingredients around their partners and neighbors. So they had, excuse me, they had tariffs on soybeans, soybean cake, fish meal from 5 Asian neighbors. That's Bangladesh, India, Laos, South Korea, and Sri Lanka. And those were the tariffs they had imported on their partners. They're lifting those tariffs to spur and stimulate some economic activity between the nations. Because the way they're seeing is, hey, if we can't do a lot of trade with other countries, let's build other markets and relationships to have the opportunity to trade our goods and products. It's kind of a secondary plan. It's not save ourselves by doing this, but it's in addition to trying to figure out our situation in the U.S., let's open up some other markets to keep ourselves competitive. All right, so that's happening. That's something that's pretty interesting. And last but not least, this is a big win for American Express and Amex card holders. I love my Amex. I just wish more places would accept it. I know that their merchant fees are through the roof, and that's great. I deal with that as well. I accept Amex. And at the end of the day, what's happening through American Express is they had a court case. Yesterday, we had that ruling, by the way, and we said in our trading room, Amex is going to just skyrocket. Actually, one of our members, Steven's like, check out American Express. Check out the stock. We had a look at it, and it just absolutely ripped. We still see more upside for Amex. Basically, the idea was the ruling from the Supreme Court was that the credit card company didn't violate federal antitrust laws with restraints it places on its merchants. It's historically charged higher swipe and interchange fees to merchants than competitors, so that's why Amex is a card that's not accepted everywhere. However, Amex card holders tend to be wealthier and spend more per transaction, so that would balance out typically with some stores. Not all stores see it that way, though. They, depending on what products you're selling, what business you're into, maybe a wealthier client doesn't mean much to you. All right, like, I mean, how much toilet paper are you going to buy if you're a toilet paper retailer? But maybe the brand or the class or the quality of it will be different. So, I mean, I don't mean to open up a massive debate, and I could. And I would ask you guys, what do you think about this American Express situation? I'm happy the Supreme Court ruling ruled in their favor. I use my Amex anywhere that I can. It has great points, but those points come at a cost to the merchants and the retailers that sell you the products. So it's a double-edged sword. So anywho, watch Amex, stock symbol AXP. I think it's got a lot more upside. Amex had set aside a great deal of money to pay a settlement in case it had to. Now it doesn't have to. That money could get redistributed into its innovation silo, innovation department, or they could use it to do stock buybacks, issue a dividend, number of things, and that's what investors are happy about on Amex. All right, that's what I got for you guys today. My voice is getting a little raspy on me. Hope you guys enjoy it. Nice raspy George. If you guys have any questions, pop them below. Just to summarize everything, we had some few bearish days leading up to today, and I think this morning I'm going to try the same trade. No need to reinvent the wheel. I'm going to try to short rallies, but understand that the more that strategy works, the less likely it is to work, if that makes sense. So the fact that it's worked the last couple of days makes me a little nervous shorting rallies on the open, but I'm going to give it a shot. If that doesn't work, we're going to convert the bulls and start buying dips because there's going to be a huge short squeeze. If we get above some of these resistances today, we could squeeze out a lot of late shorts from yesterday, and that's the exciting prospect. That's the bigger opportunity, I think, today. But before we get there, we're going to trade some more downside, rope in some last-minute short sellers. Thank you for tuning in. You guys have yourselves a great day. Manage your risk, trade like a trade pro. See you tomorrow morning at 9 a.m. And I invite you all to come out and trade with us in our trading room Monday to Friday, 9 to 11 a.m. We trade in a community, and there's a lot of benefits about being in a community. And remember that for Wednesday at 3 p.m. for our latest YouTube upload video. Take care, guys. Have a great day. See you tomorrow at 9 a.m. for myself, Mark, and Victorio. And what young kids are saying nowadays, peace out. Actually, the young kids aren't saying that. We were saying that way before. I guess I could be a young kid to someone. And now I shut up and turn around. Goodbye, guys. You bring up age, the offensive game. You'll offend everyone and anyone with age. Especially Steven. Yeah. All right, YouTube, take care. Trade Pros, let me open up the room. Give me a second here.